Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, February 2nd, 2021. In this video, what I want to do is reiterate some of the things I've highlighted recently, kind of tie it all in together, and I'll tell you the common theme of this video is that the major asset classes and some key stocks are all at or just very near key levels. That could be a key resistance level, a key support level, levels which, as I've said, they're either going to rally off of for the equity markets and continue the uptrend, go to new highs, or break down and give us some sell signals. So we've been there last few days, despite today's rally in the market. I'm going to talk on that. It really hasn't changed anything other than giving us, so far a whipsaw on that breakdown in QQQ, but there's a big asterisk by that, in my opinion, because, which I'll get to in a second here, tonight after the market closes, we're going to have two of the big market-leading FAANG stocks, Amazon and Alphabet, GOOGL, the parent company for Google. They're going to report earnings, and I'm going to go over what's happened since the rest of the FAANGs have reported earnings. So here's how we're going to do this. We're going to look at the US dollar and the euro real quick, because that is, as I've covered ad nauseum lately, had an extremely tight correlation to both the stock market as well as other dollar-sensitive assets, such as crude oil, and I'm going to get to crude oil in this video towards the end. So we'll start out with the dollar, look at the equity markets and the big FAANG stocks, energy sector, because that's been one of my radar lately. And of course, with that, we'll look at crude. And then at the end of the video, time permitting, I'll just do an update on the what I call the Reddit trade, which is blowing up today, as expected. I said that wouldn't last long, and they're fading that big rally in silver yesterday. GameStop and AMC are imploding. So we'll get to those time permitting. All right, starting out with this chart here. This is DX, the US dollar index futures. It's the same 60-minute chart I've been highlighting. We have now hit my big 91.81 target. That may be the end of the run, and if so, this is just a counter trend bounce, although we are above it right now. We're above it by a relatively small margin, and it's not anything impulsive so far, but you can see that we are above that level. So technically, it's a breakout in the dollar. And if we can continue to build on these gains, I think it'll become apparent to all. So bottom line is we're close enough. Let's just call it at that target now, maybe a little bit of an overshoot. But the higher we go from here, the more likely it is that the dollar has broken out. And again, you can see it's a pretty big resistance level there, all these reaction highs back here. And the uptrend continues. We put in a divergent low. The dollar's an uptrend. And I've gone over this time and time again recently with the overlaying charts of the stock market. There is an unmistakable correlation, and I'm not going to do that in this video. I will cover it with what I have, maybe crude oil, because that broke out today. And we'll get to that one in just a second. So there it is, dollar breakout, yet the market has not gotten the memo, nor has crude oil. Let me just show you the euro real quick, what that's doing. We can look at it via E7 Euro futures right here, and they have also broken down. When I say broken down, I had this target right here, my T2, which was hit back here. Little momentum overshoot, so I put that secondary yellow trend line right there, hit it again, and finally broke down today. So hopefully you can make this out. I know from time to time I forget some of you guys are using smaller monitors or phones to watch these videos, and you might not be able to see. I don't know if you can zoom in on the videos, but there it is. There's a breakdown in the euro along with the breakout in the dollar. The one thing that I will give this little question mark as to why you wouldn't want to go in all in short on the euro, all in long on the dollar. There's some pretty good divergence. There was divergence when we first hit my T2 right here, my second target back here. I highlighted at the time we had divergence just on the PPO. However, that divergence has now extended. So we have a much larger divergent low, which I hate to say it, but if I don't say it, I'm not doing my job. That does set the stage potentially for a whipsaw signal, aka bear trap. In other words, when you break support, bear short, And then if these divergences play out, if they can rally it back up here, they meaning market forces can rally the Euro E7 back above that, let's say the 120.91 level, then you have a false breakout and the divergence will be confirmed, and that could set the stage for a rally there, and then you might want to add a downtrend line right there. So this is what it sort of looks like here, a bearish falling wedge, but we had, remember, a big large bearish rising wedge recently that broke down. And look, the trend right now, that's all ifs, and these are just things to watch for. If they happen, you react to it. If you're short the euro and you see the breakout fail, especially if you see the downtrend line get taken out, then obviously you want to cover at some point there, not too late. But as of now, it's a breakdown, and the euro remains in a downtrend since it peaked back here on January 6th. And when I look at the daily time frame of the euro-US dollar pair, we can see also a breakdown of my on the daily chart I have it at 120.700, and it's a nice horizontal price support. You can see right here. Similar, it's not exactly a head and shoulders, but it almost takes the form of that. That left shoulder doesn't come down all the way, but it's price support. Nobody can argue that. There's a lot of reactions, have been a lot of reactions there since we took that level out, and we also took out what is a potential uptrend line. Really only 3 reactions. We had a minor reaction here the other day, but either way, that's a breakdown. And remember, it also comes on the heel of this big divergent high right there. We go to the 60-minute chart. That was the support zone, and the yellow line was really comparable to what I just showed you a second ago on E7 right here. You can see that's nice support, and that's broken. However, there it is. You also have the potential divergence. So, maintaining what I've been saying for the last week or so here, we're at, I think, at a very important technical juncture where should we go this way, and I am still leaning that way. We break down, we go to my next targets on the euro, next upside targets, the dollar breaks out and runs, and then the market will sooner or later get the message. And finally, I said we'd look at one other chart here, just one comparison chart. And this is the, nope, this will be it. What I've showed you lately, I've showed you a couple things. I've showed you I've plotted FXE, which is the Euro ETN, against other dollar-sensitive assets such as crude oil. In this case, that's what we're looking at. We have USO, which is probably the most actively traded crude ETN. It's been around for a long time. Does a good job of tracking crude. That's in black right here, the black line. And then the green line, I did UDN this time. And UDN will almost mirror FXE perfectly. It's the inverse dollar. I could put FXE and I'll overlay it. And what I'm showing you here is because we flip it upside down. We flip the dollar upside down. It gives you that negative correlation between crude and the dollar, meaning one goes up, the other goes down. Turns it into a positive correlation, just so you can see it better. And again, I always say don't look at the difference in the lines, the differential. Look at the direction they're heading. Look at where they have peaks and troughs. And you can see a perfect, almost perfect correlation. And now what you see is the biggest, we didn't just lose the correlation where maybe one's going sideways and one's going down. We're going in opposite directions. And so what I'm going to say, and I've said this before, I can't say with absolute certainty that we'll get a mean reversion, but I can say with a very, very high degree of certainty. Not absolute certainty, but a high degree of certainty. Mean reversion can come in one of a few ways. It can mean, well, we're looking now, of course, this is the inverse dollar. So what this would mean is dollar down instead of up. And they play a game of catch up there, or crude comes down. So, based on where we're at, all I can tell you is I just showed you we're at key levels where if we continue to move up much more upside in the dollar, much more downside in the euro, the breakout will be pretty much solidified, let's say. And at that point, that should almost certainly put pressure on crude oil and cause this breakout today that we have to fail. Otherwise, what this is telling me is that market participants, those that are trading crude, and crude traders, especially if they're professionals, they're trading crude futures, they're a pretty savvy crowd. And what I'm talking about here with the dollar, they're aware of that, and so they're betting that this rally into resistance on the dollar, support, or we'll call it the breakout that it is. They're betting it's going to fail in the end of the run for the dollar here. That's what I'm assuming because they are buying crude today. Crude broke out of that trading range. I just jumped over to the CL 60-minute chart. Those are crude futures. As I pointed out, it's been in a sideways trading range. We had a triple top here. Divergence started to correct, but we've been bouncing off the bottom of this range here now for months, and this is a breakout. So here's what I need to say. A breakout's a breakout until unless it fails. So right now, you can only take that on face value as bullish. And you can guess which way the dollar and the euro are going to go. I gave you my thoughts. I think that the dollar will go on to break out and the euro will go on to break down, but I have to respect the fact they might not, and those divergences could play out and it could go the other way. And if it does, then this breakout in crude will likely stick. So what you want to watch for, I give you a minor uptrend line right here, a break of that trend line and a fall back down into the range, solidly inside the range, will be a false breakout. And so that's something that we need to watch for. I would put very good odds at this happening, and if we get a false breakout, we'll probably come at least to the bottom of the range and then maybe break to the downside. This scenario is likely to happen if the euro breaks down here, has some more downside, and the dollar can hold and build on this breakout today. So that's what I want to talk about there. And then that all ties into, we're going to roll into the energy stocks since we're talking crude. Then I'm going to loop back to the big FAANG stocks in the market. So let's do that. Let's just talk energy stocks. And the common theme of this video is that all these levels I've highlighted recently, let's talk about them in energy. We just talked about them in the dollar and in the euro. And you can see in XLE, I've laid out scenarios for the last couple weeks now that the bullish scenario in XLE would be to come in and back test the trend line and then back off to the races, because we took out this primary downtrend line. I said that was bullish, and I was expecting a correction, positioned for it, shared it on the site, used XOP and DRIP and XEX as proxies that you get more downside on those guys. But this is big energy right here. This is XLE, and it bounced exactly where expected. Now let me say this: just because it bounced there doesn't mean it's going to continue to bounce. It could, and I already said this many times. If you're an energy bull and you've been looking to buy, back here is where you shouldn't have bought, and that was a time to short. So far that short has played out, and this is an objective area to step in. And the one thing I often say about the price targets and the support and resistance levels that I lay out on my charts is the initial tag of support from above. If you're falling down and you hit a support level, it's that initial tag where I expect a reaction, and that's what we have so far. So the fact we bounced here is by no means not only a surprise, but it's also to be expected. The initial tag, we back tested and we bounced. Now the big question is, you can see 42 is resistance, give or take. Will that bounce? Is that it? Is it one and done? Are we going to go on now and break out to the previous, break above that previous high and hit that next potential target resistance level, about 47 in XLE? That'd be a pretty good move in the energy stocks. Or do we fail and then break below the trend line? And we also have some horizontal support below about 37 to 38. There's some reaction lows here. I probably should put a secondary line just below, call that a support zone. Runs from about 37-ish to about 38-ish. Okay, so that would be quite bearish, because that would mean this breakout here is a false breakout, failed breakout. And then if we broke 37, we're probably going to come way back in here. And there's pretty big divergence, so that is a possibility for sure, and that's going to entail crude oil is going to need to fail that breakout I just showed you. So that's it, guys. If you're bullish, we're not far off the back test of the trend line. It's still an objective time to go long if you believe there's a lot more upside in the energy stocks. So point is, watch these levels. Those are levels to watch. If we get back above 42, that's bullish. Get above that previous reaction high, we'll probably run to 47 before we have a decent correction in XLE. The other ones that I've mentioned along with it are XES, and you can see it's done exactly what it should have done so far. We had a rejection at 55.44 resistance, where I mentioned that was an objective short entry. We pulled back from there. The correction so far was about 13-14%. So that's on a non-leveraged ETF, so plenty of meat to have been made on the short trade. And 47.75 was the first support level or target on this daily chart, and that's what we hit the other day. We hit it, boom, 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 and we're bouncing today. And that's along with the breakout in crude oil, popped above that range. So where I'm going, there's no coincidences here. All these are tied in together. We're at these key levels. So if that breakout in crude sticks and crude builds on it, it probably means the dollar will reverse off resistance here or fail today's breakout. The euro will, that divergence will play out. The euro will rally, or we go the other way. Like I said, I'm still leaning that way, but it's so easy. Well, you're right on these levels. No reason to make a big bet. The only big bet to be made recently is if you're long, you could go long there with a full position with a stop somewhat below. But to short now, if you're already short from the top here, you could short the kickback rally. You just have to pick where your stop's going to be. We're in no man's land. That means between resistance and support. So if you want to short the bounce because you're expecting a breakdown, nothing wrong with that. Just don't let it get away from you too much. And then the next objective entry or add-on would be a break below the recent lows, 47.75, or you have a couple reaction lows a little bit below that. And then that would take us down for a back test, I think, on this trend line here on XES. And what that might mean on XLE, which I just covered, is maybe we continue to back test that trend line or we go below it. So there's the XES, one of the energy sector ETFs, and then XOP I've covered a lot lately. And again, common theme here. Resistance, objective short entry a few weeks ago. First target on the daily chart hit about 63.50, and we're bouncing. This is a reaction off support. But we are below the trend line, below the wedge. We back tested it a couple times. We're still below it. And next sell signal will come if and when we break below 63.51. And then when we look at the 60-minute chart, which is what I recommend to kind of hone down on your entries and exits, daily chart just paints it in a broader brush to really hone in on the targets. I have at 63.71. That was my first target, and it was hit here, and it was hit again. And as I often say, the initial tag, in this case the second tag of support, you get a reaction, but we're still below. We have this descending triangle pattern that I just made in blue right there. Bullish, if I'm not going to dismiss the trend line, but we have resistance just above at 68.93, so we're going to call that 69. So a solid break above 69 could bring us in for a back test of the trend line. There's quite a bit of resistance overhead, so I think the energy stocks have their work cut out for them. But the next big sell signal will be if we fail here on XOP, or fail soon, before around $69, and then take out that 63.71 support, and that'll open the door to that next target there. So levels to watch, and let's look at the market right now. Okay, so in S&P 500, the breakdown's still intact. We broke down last Wednesday, and as of now, we're backtesting, or roughly backtesting the trend line there. I'm talking the yellow primary trend line off the March lows, daily chart here. So that's still intact. However, on QQQ, so far the breakdown that we had on Friday has proved to be a whipsaw signal. We had a red candle yesterday. We parked right about on the trend line. We're above it as I'm doing the video now. Plenty of time left in the day if we get a late day reversal to fall back down there. But here's the thing, guys, and I'm not trying to just fit this with where I think things are probably headed, but this candle right now, I give it about next to a zero weighting, a very low weighting. Why? Well, this is why down here. I don't know if you can make it out here. did the updated holdings on Invesco's site. Invesco is a company that manages QQQ. They only update their I don't know if it's monthly or quarterly. Either way, on the website, 12/31 is the last reporting period where they showed you what the weightings are. But I just want to point that out. Apple's 12.25% weighting in QQQ. Microsoft 9.13. Amazon 8.88. It's almost 9% there. Alphabet, both share classes comprise 6%, Tesla 4.5%, and then Facebook 3.75. So you can see here, this is the bulk of QQQ right there. I mean, almost the first two alone almost make up a quarter of the weighting of the NASDAQ 100, just two companies. And then you add in Amazon and Alphabet. So you can see it's a very heavy weighting. And now let's talk about these. Okay, we have Apple reported last week, as did Microsoft. Tesla just reported, and Facebook. So all we have left tonight, the last two on these top holdings, are Amazon and Alphabet. And so therefore, that's why I wouldn't put a big weighting on this candle, because let's talk why. All right. Okay, Apple, I put arrows here on when they reported. I think you can see this. There's a white arrow here. That was their reporting day. So remember, they report, most of these big FAANGs and tech companies report after the market closes. So you can see what happens. So here, what I'm looking at here is there's a fairly common or consistent theme that so far, big tech and the FAANGs have been sold down. This was Apple's best quarter in history. They blew it out of the water, as they often do, but yet there's been selling, whether it's institutional, retail, a combination of both. They've sold that. And it also gave us that failed breakout, that breakout above the trading range. But tying in with my common theme, I said there's a big level here. I wouldn't put too much into the fact we came back down below those previous reaction highs, because sometimes, quite often, that happens when you break out the new highs. You come back in, you fail to break out by a little bit, a relatively slight margin, you go up. So it's not over for Apple yet. Apple bulls stepped in where they should have, and where I said this purple uptrend line came in, held it, and moving up today. But here's the thing. Let's keep it very simple. Bullish takes out those previous highs. Bearish if it breaks that trend line there. I've covered that. First, if it does, first stop 125.75, next stop 107.50. I think it'll be a very fast move if it happens, because that will be cleared all that the breakout has failed. But again, common theme here so far, in order of market cap, the first FAANG that reported sold off in earnings. This is the only one that's gone against the that trend is Microsoft. The earnings date was Tuesday the 26th, last Tuesday, a week ago. And Microsoft built on it and held. That helped to solidify its breakout. So when I'm talking about its breakout, I mean above this multi-month trading range. That's been the story with almost all the FAANGs. They peaked out months ago and have gone nowhere but sideways, with this one breaking out right here. So Microsoft, we give the Apple, we give the bulls, let's call it neutral. Bulls get a check mark here. Amazon, they're going to report tonight, so that's why the arrow is right ahead of where tomorrow's candle will be. They're going to report after the close. So again, this breakout here, this trend line right here today, doesn't mean anything. Things are going to change. Amazon's either going to build on today's gains. You know, the stock will either be up or down tomorrow, and quite possibly pretty big. We get usually some pretty big moves after earnings. Again, common theme here. Here's Tesla, who reported Wednesday, and you can see Tesla sold down after the earnings report. We're almost back to where we were, but the common theme again so far: Apple, Tesla, two of the three sold off after earnings. Facebook reported back here Wednesday, last Wednesday, clearly is sold off. Remains in that multi-month trading range. Again, that shaded area, I guess you can make that out in the video, that boxed area, and came down, and it's trading around the midpoint of that range right now. So what does that give us? Apple, Tesla, and Facebook, those three have sold down and remain down since earnings, where only Microsoft is up, and that's it. So the other one tonight will be Alphabet, and we'll see where they go. And so that's why I think in the next couple days here, maybe as early as tomorrow, once we get these guys out of the way, because of their heavy weighting. And these are the market leaders. You want to see, if you're looking for a big bull run into 2022, you're going to need the market leaders to start getting back in charge here. It's always been, throughout history, a bad sign when the market leaders stall out or start to go down and the rest of the market's rising. You might say, oh, it's good market breadth, other stocks moving up. No, right now it's been a lot of lower tier, second, third tier stocks. So again, these guys may have been taking a breather. And look, I'm going to give it to Alphabet here, that you had that multi-month trading range and it broke out. So like Microsoft, it has broken out and it is above that trading range. The one thing there is you have earnings. So we'll know. And the earnings that they report tonight, they'll either hold or build on these gains, or it has the potential to cause this to be a false breakout if we fall back down within this multi-month trading range. And again, you can see a primary uptrend line right here. So that's what I would look at on Alphabet, those two things. The top of that trading range right there, and this uptrend line, which happen to come in roughly together. So bullish, anything down to, as long as, even if we sell off after earnings, as long as those levels hold, that helps to support the bullish case. But if we fall back below these levels, this is a big component of the NASDAQ 100, both share classes, GOG and GOL. Remember, you need to add them up when you look at the weightings. Same company, they just have two share classes. And of course, sometimes I neglect to mention it as I'm going through all these charts. It's these things too that say, when you can look at this and say, okay, it's a breakout, why not take it on face value? And I say this all the time, breakouts that occur with negative divergence and overbought conditions, more often than not, they fail shortly afterwards. Breakouts that occur without divergences and with a stock not being overbought will usually stick. So here was there was a breakout above the previous reaction high, put in negative divergence, had extreme overbought conditions right there, and boom, the breakout failed. All right, a quick update to the some of the trade ideas, as well as just everyone's buzzing about the Reddit stocks, and that would be GameStop is really the poster child of that one. I mentioned yesterday, I did that video and I covered it, XRT was down big, and then I went on to mention, in the comments below, that the top three losers were these Reddit stocks: GameStop, GME, SFIX, PETS, and I gave you the charts there. PETS, let's take a look at those. As of yesterday, this was again yesterday's chart, it had dropped 40% since Wednesday's peak. And this is what I always say, it's like a game of musical chairs. You cannot be the last guy or gal standing when the music stops, because that's what happens when you don't have a chair. So that trade's getting pummeled. I'll look at that today. PETS, let's see if it's down again. Yeah, down, continues to fall. Also covered in there. Next one up was GME. And you can see GME is just getting clobbered today. It's bounced off the lows so far, but down another 40% now. But from where we were yesterday, the stock was down about 67, 65 or 66% today so far. And look at that, it hit my 86, 80, 18 target. It hit this one this morning, the 147-ish target right there, big old gap. Had a little reaction on it, back tested, and boom, down to the next one. So they're buying, stepping in now. It'll probably bounce when it gets here. Bounce is probably almost done at this point. If you can get shares, you can turn around and short it here, and with a stop above 147. But it looks like that party is over for GameStop. And then I also mentioned SFIX, Stitch Fix, again, top component of the of that ETF. Well, actually, they're supposed to be. I read that XRT, the retail sector ETF, is supposed to be equal weighted. It's supposed to hold about 100 companies with an equal weighting. But what had happened is these companies got so far ahead of themselves, and you can see this one continues to go where I had the arrows drawn, which is down after that divergent high. Probably come in here, hit that level, and work our way back down to this 42-ish target right there. But this is what XRT looks like, and this is what happens when you get those weightings out of whack. So XRT, the retail ETF, it has those 3 stocks in there. Boom, right down, and look at that little momentum fueled overshoot and parked right on that uptrend line that I had there, and that was the first logical target with this secondary uptrend line, the next target if and when this one goes. And then the other one on Friday, I got started seeing headlines and articles about the Reddit group turning their focus to silver, trying to engineer a short squeeze on silver, whether there were true or unsubstantiated rumors about being a shortage of physical and all this stuff. It had a big pop yesterday, and you can see they faded all that and then some. These are silver futures. Remember, you're going to see gaps on weekends because the futures shut down. So there's a gap right there. That's where we closed on Friday, gapped up, ran all the way up here, and look at that. They faded 100% and then some of that pop, and I said that yesterday that would be unsustainable, not to chase silver. That's what it looks like today. So really what I'm seeing is the bursting of that little bubble. Doesn't mean that the Reddit group is done, but right now a lot of them getting smoked on those trades. Again, if they got in, got out, that's a smart move. When you see something like that, especially I said on silver, they're not going to manipulate silver long term, or gold or Apple or anything that's widely held and very actively traded. It's much easier to manipulate short squeezes and things like that, and more thinly traded smaller companies like GameStop. And then the mentioned yesterday, the silver mining stocks. This is just I feel bad for the whoever bought up here at 275 yesterday on ASM. The stocks got cut in half since then. They lost half their money if they chased that breakout, which again it wasn't a technical breakout. It was I trade technical analysis, so I can't speak to this whole Reddit thing. I hope don't ever foresee following there. If you guys hear what's going on, what's their next stock they're looking at, or next trade they're buzzing about to run up, I'll be glad to post the chart. If I see anything technical in the charts, such as a level that might cause a breakout, some bullish developments, sure, I might say, yeah, let's jump on that trade. Here it is. But I'll only go after it for technical reasons, not this kind of hype. So I just want to show you what's going on with those silver miners, and this is SVLP. Global Silver Miners iShares. It's an ETF that tracks silver miners, and you can see a failed breakout because of that. We'll call it Reddit spike in the stocks yesterday, and you can see again all these stocks taking it on the chin today after being hyped up. So a lot of failed breakouts there in the silver sector. And where does gold and silver go? Remember, gold's even much more widely held and harder to manipulate than silver, and gold really didn't react yesterday. Gold's just kind of a dead money trade, so that's why I haven't talked about it much lately, just chopping around aimlessly. And where it goes from here, again, I've covered it quite a bit, the correlation between the dollar and even things like gold, and so it all ties back to the euro and the US dollar where I started the video. So we're right there. There's no change. I'm looking at another monitor, the euro and the dollar about where they were when I started the video. So that's what we'll watch, and we'll also watch to see how Alphabet and Amazon trade. And remember, it's not the initial reaction after they report, it's the lasting reaction. So wait until the conference calls are out of the way and wait and see how they trade tomorrow, and then we'll either have this breakout in QQQ, which so far the breakdown was a whipsaw. That's either going to prove to be a whipsaw, and that would be pretty bullish, because I often say fewer things in trading are more bullish than a failed breakdown, and this one broke down, giving us a sell signal, but we popped back up in there. And that's why when it broke down, I was saying not an all-in sell signal because of all this going on, earnings and everything else, and the dollar, where the dollar is at. So I still maintain we need to take out those lows from Friday to open the door, or give reason to add to go to a full short position. A full short position doesn't mean 100% short in your portfolio. Can, if that's what you want to do. To me, it means, okay, how much of my portfolio do I want in the stock market, a broad market, if I want to trade the indexes, and or other individual stocks. And then of that, let's say it's 30%, 40%, whatever that number is, then that would, at that point, I'd go up to a full 40% short position on the indexes if we get that sell signal. But right now it's been a whipsaw. I'm not covering. I did add some shorts for that, and I'm not covering until I see what happens after those two big fangs report tonight. And if I don't have any solid clues tomorrow, I'm also watching the dollar and the euro, and they'll also help guide how I position going forward. Okay, and that is, let me check my sheet. Yep, my notepad in front of me. Yeah, that's everything I wanted to cover in this video. All right, we'll wrap it up here and get this out to you guys. This has been Randy Finney with Right Side of the Chart. Have a great day.